Palantir has recently reached $37, and for many of us, myself included, that is a gigantic milestone reached for a stock that has been trading under $10 for quite some time just a year ago. Things have really changed for Palantir, and for the most part for the better. Palantir is now officially part of the S&P 500, attracting a lot more mainstream adoption and can climb above its previous peaks and entering in the price discovering phase. In other words, sky's the limit. The market wants a comeback, and what they got is a triumph. With the financial landscape moving thick and fast on so many levels, it wouldn't be surprising at all if they will make new highs in the month to come. It's often said that the volatility is a very sharp, double-edged sword. If that were the case, then at least sometimes it works at our favor. As one of the most symbolic companies in the brave new world, Palantir has been keeping the market's hope up to offer a safe haven for anyone looking to commit their assets in equities. AI may not be mankind's salvation from itself just yet, but Palantir shareholders certainly hope that they can be saved by its hype. Hello everyone, I hope that you're doing fine, having a great time and many profitable trades. In this video, we're going to talk about Palantir and see whether it can make you a lot of money. As we know, over the past few years, the world has been changing. Companies that were once places to be, for those wishing for gainful employment in exchange for education, have been reducing their staff size, and it's been a very traumatizing experience and very disorienting one as well for anyone affected. At the same time, the sudden and sharp rise of inflation has been melting away people's savings in many places that have mostly known deflation, tipping off the precarious balance that those economies manage to safeguard. And as painful as they may be, these shockwaves have also proven to be useful, because when the very fabric of our own reality fizzles away, we should seize that opportunity to reforge a better tomorrow. And in order to achieve this, the most important thing to do is to find the next golden goose. For many, they think that Palantir is exactly what they've been looking for. Over the years, much more than yet another tech stock begging for our money in exchange for empty blue sky promises, it became a major player in the sector that may tell us a lot more about the market than we initially expected, such as the risk exposure people want to have and whether we collectively think that the tidal wave is once again ready to raise all ships. The company has enough reputation and prestige to arouse the market's curiosity as well as people's tendency to follow trends. It is a company that we would often view equally as the risk appetite measure for the market alongside others like Tesla or Nvidia. Palantir's reactivity to macroeconomic tidal waves makes it a very intriguing and an interesting company to analyze and to perhaps invest in. In this video, we're going to take a deep dive into Palantir and to see whether it deserves to have a place in your portfolio. Before the video continues, I just want to take a moment to thank each one of you for coming or coming back to my channel, and hope that you will enjoy your stay and to come back for more. If you like what you see, please consider to drop a like, subscribe, and to check out my channel for more content about Palantir and other companies I may cover. With that being said, I hope you're gonna like today's video, and let's continue. Let's start with the short-term price action. Palantir has been having a great time recently, going beyond its 2021 peak of $35.21. This move is extremely significant because it removes a major psychological hurdle for anyone who wants to buy Palantir, since they may fear, and rightfully so, that a resistance will never be pierced through, and every time we get close to it, there's going to be a large number of people who want to dump because they assume others will also take profits. That fear has not become the reality, and the share price went above $35 and managed to stay there. Right now, the short-term volatility decreased significantly, probably to mark a pause, to take a breath, reassemble the bulls, to keep discovering where the price could land next, depending on the market volatility. Palantir's own fundamentals, as well as the movement of capital around the world for either profit maximization or capital preservation purposes, are also going to be very important to watch out for. At the moment, Palantir is having some very slight pullback movements, going from like $38 to $36.46. From a media perspective, news articles around Palantir have remained mostly positive, which kind of reinforces the general sentiment on what's going to happen for the remainder of 2024. Between the ongoing elections, mounting pressure from Wall Street in order to push the safe interest rates down, to really just pull the equity prices back up. And by the way, I'm not talking about necessarily the NASDAQ ones, because it doesn't necessarily fit well, because we're talking about Palantir here, which has been having an absolute great time. But for many stocks, the fact that we have a very high interest rates just means that people who would have otherwise bought these shares are not interested, because the rent for money is very high. So they might as well just collect the risk-free, 5% at their local banks, and not to bother with the daily price actions of equities. So at the same time, we may also witness a possible stars alignment for tech and crypto assets for the years to come. Because the price action had a fairly sharp rise recently, there are also many doubts over what's going to happen in the short-term price action because of a potential overbought price action situation. The current news cycle may not have the required steam to immediately push Palantir to new highs, but it's certainly capable of edging the stock to higher levels and to maintain the narrative going. The articles mostly talk about the momentum that the stock has been enjoying, as well as speculative nature of the stock market. The stock's price action has been able to hold itself above the $30 level so far, and I'm going to say that I also expect that the price action will be able to hold itself above the $35 level while looking for consolidation and recovery. A lot of people are also looking to find a decent entry point to make a comeback to the more exciting parts and the more volatile parts of the financial markets, and when the Japanese market took a dump, their wish has been granted thanks to the fear of paper hands. To date, that was the last opportunity to enter into Palantir below $30 for anyone interested by its fundamentals. The next target is probably going to be $45 to $50 after a period of price discovery. Because of the composition of the shareholder base being more retail-oriented than institutional, Palantir has always been a stock made of momentum and a large dose of anticipation and self-fulfilling prophecy, instead of level-headed analysis based on actual numbers. Irrational analysis of its fundamental results may not be enough to boost its current valuation, or at least not to the extent people came to Palantir for in the first place. We can see that its widening scope has grabbed the market's attention far more than anything else. The region with a lot of support levels has been identified at around $25, above which we would enter into price discovery phase, providing a huge amount of stability to its price movements. These levels have served as important markers for investors and indicate a potential area for price reversal or continuation if things get there. Of course, we're getting further and further from that region, and the fact that they've been tested and successfully defended shows that at least around that region, we're going to see a lot of resilience. The current consensus about Palantir is that the market now wants to keep it going, but at the same time, they're also looking for more clarification from the rest of the potential shareholders, whether they want to jump in before making the move, because a lot of people also believe that the world economy is in a very weird position. Like, QQQ has enjoyed a lot of growth in an economy that's looking to correct massively, and in some cases has corrected massively. I understand that the financial market doesn't always correlate with the real economy, but at some point, some sort of correction may come overdue. We may be having inflation for years without additional liquidity injections from the central banks, and things may start to change, and to change at a ever more, rapid pace after the US elections, so that we may get ready for that. Of course, from a longer term perspective, Palantir has a pretty interesting price action pattern compared to the all-time highs just a few years ago, because it's on the verge of going beyond the previous resistance of $35, which may bring the stock into a new phase of growth. Palantir is a tech company created back in 2003 and went public in late 2020 at the peak of the last market boom. It operates in the data analytics subsector of the tech space and has been one of the leading companies in that area. It is known for its position taking, the relationships with public sector actors, and its engagement of key members such as Pltr and Alex Karp. Another aspect that sets itself apart from many of its rivals is its proximity with the intelligence community, as the company relied on seed funding from the agencies back in the earlier days. No one ever shouts from the rooftop that they want to do evil, but Palantir certainly doesn't shy away from more delicate situations by working with public sector agencies in legal, healthcare, border control, defense, and law enforcement. Simply put, it is a company that doesn't mind being portrayed as evil and almost wears it as a medal of honor. In fact, shortly after it went public, Palantir decided to move its headquarters from the Silicon Valley to Denver, Colorado. This move was more than a pursuit of lower overhead or a change of scenery, but a statement about the public image it wants to portray. The market has always shown a lot of interest in how the company and the stock are doing. The fact that it went public when the bullish sentiment was sky high in the tech sector could have been a contributing factor, as the world was preparing for a fundamental change about how societies would function in a place where more interconnectivity happens while remaining remote from anybody in the physical world, a technological and societal utopia that was deeply flawed and never truly came to be. Palantir shares attracted the market's attention mostly because its narrative was the right fit in the right time, as the tail end of the quantitative easing era mentality combined with the pandemic era dream of interconnectivity and never-ending financial boom, while capital was looking for a safe haven from the uncertainty and the collapse of the real-world economy outside of our screens. In a way, Palantir symbolized the answer we wanted to slap on all our problems, and for some time it was made true by the supply and demand of modern finance. We are interested in Palantir's promise of reaching ever higher price levels, a promise that seemed set in stone when large quantities of money were pouring in a company with deep pockets backing it up, as the world was preparing to enter in a new era of endless growth and prosperity. This bullish and very optimistic narrative about Palantir has been backed up by the numbers. Financial information has been known to move the market as stakeholders want to have their assumptions validated by something concrete. Gross margins, cash flows, and revenue growth are some of the most sought-after data points that people want to know about Palantir when they do their analysis. The growth margin measures how profitable Palantir truly is at the core. Beyond the quality of its marketing campaigns, the hype around its projects, or its brand power, gross margin tells us whether there is enough demand for what the company is selling, and if each additional dollar covers the additional expense that the same dollar generates alongside. To that end, Palantir is a very successful company with a decent profit margin, even when the shares were trading below $10 during the last sell-off period. This was the first sign that Palantir is more than just an empty promise begging for your money. The business model is something that can be scaled up and marked up because it has true fundamental value and it is validated by the market and its clients. Once the core business model has been validated, cash flows tell us whether Palantir will need to go through cash injections to keep its operations going. And very often, a tech startup may ask shareholders to pitch in even after they bought the shares, because the funds collected from equity sale is not enough to cover the operating expenses. If that were the case, it would be a sign of weakness from the company, because it would mean that the company's own operations are not profitable enough to stand on its own 2 feet. For Palantir, that problem is also non-existent, because its cash flows have been positive for quite some month, mostly because its operations are profitable and it doesn't need to dilute its shareholders to keep the lights on. However, these numbers are not enough to push Palantir higher. The most important factor is the growth rate of revenue, especially from public sector. Like many other tech companies listed on a Nasdaq, people buying Palantir want to buy the powerhouse to become, not the decently profitable company that is. This would also explain the high multiplier that Palantir is currently enjoying compared to many other blue chips companies in more mature sectors. This is a double-edged sword for those who want to dabble in the tech field in general, but for Palantir, the public sector aspect is an additional side to watch for. Since most of its growth does come from the public, any additional partnership with healthcare, defense, or law enforcement departments may trigger massive upsides for its shares. On the flip side of the coin, every time an existing partnership ends or a scandal makes it to the headlines, Palantir shares may see a dip that could take a few days to come back from. These 3 measures are what define Palantir and may explain its dynamics in the market in general. It is an interesting company that people are putting a lot of hope into because its financial results are good and do suggest that Palantir has the potential that people claim it does. Because Palantir is a highly specialized and unique company that is praised for its technical expertise and noticed for its position taking by its management and shareholders, it's always been the center of a lot of interest, talks, and speculations from the market stakeholders, as well as the media outlets. Along with Nvidia and Tesla, it's probably one of the most talked about companies in the world, despite the fact that it has a much lower market cap than many other blue chips companies. Hardly any day goes by without an article to be written by major media outlets about how Palantir is doing, or where they believe it's going to land. The coverage can be relevant in 2 ways for our analysis. The articles can give us a feeling or a sense of what is the current market consensus about what happened, and the mood that is the most likely to influence what's going to happen next. Their tone is often determined by the price action at that time and plays the role of current trends amplifiers, rather than contrarians showcasing potential trend reversals. Even if it's not a crystal ball allowing you to see where the price is going to go next, it can always tell you what the current sentiment is, which may allow you to take a hint of what the next move may be. The second level of analysis is more basic, but also more useful. It is not about the content but the quantity of the coverage. Depending on the number of articles written about Palantir as well as who writes about it, we can have a rough estimate of how popular the company, the narrative, and the sector are in people's mind. Alongside the potential upsides, entire economies may benefit from this as part of trickle-down liquidity from risk-seeking capital. Ultimately, papers want to sell clicks, just like investors want to get alpha. If there are shining bubbles in the market, news outlets are usually very fast to pick them up, validating the overall direction of any subsequent bull runs. The number of articles currently indicates that the market is interested in what happens with Palantir, and the anticipation is a further increase in price when the interest rates begin to decrease and fall. We just have to be careful about the limit of analyzing news articles, as they tend to describe the direction the wind is currently blowing, but far less effective when it comes to predicting where things are going to go next. Now, obviously, since you're looking up about Palantir, chances are there are unique aspects piquing your interest. Trading or investing in Palantir does come with its own upsides, including its unique profile, its potential growth rates, and the existing stability. Palantir is a company operating in the data analytics subsector, which is a very promising place, lots of favorable talking points and potential vectors for future growth going forward. The world is getting more digital and analytical on a daily basis as more and more business decisions will need data-driven information in order to make that call, as well as to optimize daily operations and locate the trends of the future. Palantir has been trading for a few years, but its existence dates back more than a decade ago, and its expertise does bring it head and shoulders above many of its rivals. It has deep relationships with deep-pocketed public sector departments in defense, law enforcement, and healthcare that we talked about, all of which require Palantir's digital solutions for their planning and decision-making. Unlike many of the Silicon Valley unicorns, Palantir also doesn't pretend that it doesn't do any evil or that it lives in a perfect world. The HQ move to Denver, along with the Davos speeches of its CEO Alex Karp, do suggest that Palantir is willing to take on the challenges of the future and that it's not afraid to say so out loud. The relationships established by Alex Karp and Peter Thiel, two of the founding members of Palantir, have opened many doors in both public and private sectors, allowing Palantir to cruise on the trends. Recently, it also announced that it's going to participate in the trending AI field, which is one of the main reasons for the stock to go from $15 to $30. In addition to all this, Palantir does have a layer of stability that many of its rivals don't have, and that can be seen in its cash flows. Palantir's cash flows have been in the positive for some time already, which is a rare advantage above many of its competitors because it means that a company can sustain itself in terms of the needs and doesn't have to beg investors for more cash injections in exchange of dilutions. With that being said, investing in Palantir also comes with a few unique downsides due to its company profile and the characters of the sector itself. Being a company that analyzes data for a living, Palantir will be more exposed to potential legal problems compared to other industries. Since the topic of data privacy, ownership, and proper usage have been under heavy scrutiny from the past scandals with social media, how Palantir acquires, processes, and safekeeps those data while serving its clients can be open to legal battles, which may cost the company its image, reputation, its bottom line, as well as future opportunities to get more contracts from government agencies, the same agencies that may require these data that were maybe used under inappropriate circumstances. It's a bit ironic, but that's probably the way it's gonna go. My theory is that since this is a touchy, delicate area of this economy, and no one wants to rock the boat, meaning no one wants to take on the blame if anything bad actually happens, in that case it's possible that Palantir may take on the loss without having the capacity to shift any of the blame to other stakeholders, because if they do that, they're going to rat on other people, and maybe they don't have the opportunity or the luxury of doing this. The other thing to consider is the potential decay of the narrative's value. AI and data analytics are very popular topics now. They're trending in the market, that's for sure. But what would happen if they stop being so popular once a newer sector has been created out of thin air or come back from disgrace? If we look at what happened with electric vehicles, we may see a similar drop in interest for data and AI, along with a potential drop in their market cap value for companies like Palantir. So, what these additional risk factors mean for anyone really looking into buying Palantir is that it is a blue chip sized tech stock with the volatility, or arguably with the volatility of a startup, mostly held by retails. Trading comes at a significant potential price volatility cost, and investing does require a fairly high tolerance of uncertainty. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflation. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Alright, so having said all this, my recommendation for Palantir would remain consistent with my previous ones, which is that in the long run, I do think that this is a good stock to pick. But in the short run, I think that it might be a little bit overbought, especially for the next few days and weeks. The market would need new catalysts to start the next phase of exponential growth, while in the price discovery, if investors look to get back into the game, both as a safe haven for flight capital as well as a token for optimism regarding the new hopes of tomorrow. The share price does look a bit steep at the moment, so if there are pullbacks in the upcoming month, then I would say the more the better. I would recommend to commit a maximum allocation of around 8 to 10% of the capital and to gradually purchase over the next 18 to 24 months.